Hello, today I want to talk about meme stock management and specifically give some kudos to the C-suite. Now, before I get there, let me just say that in general, I'm an investor. So I'm looking for fundamental reasons for a stock price to be worth more than it's currently trading at. Okay. Now, in the past, I've criticized these meme stocks. You can watch those videos if you follow these links here because these investors are really bettors and they're really completely ignoring the fundamentals. They're paying way more for a stock than it is worth based on these fundamentals. Let's go through a little bit of that here. So if I look at here, we're looking at Tesla, AMC, and Zoom. At the time of putting these slides together, I said, hey, Tesla is trading at $688. If I then say, well, I'm going to look at the fundamentals, what value should it be? That gives me a value of $55.08. Now, the whole analysis you can watch by following this link right here. Now, again, betting on this stock versus its actual fundamental value, big difference here. In aggregate, this is going to be a losing investment, okay, over the long term. Now, over the short term, who knows what's going to happen? That's pretty noisy and often doesn't really reflect the fundamentals. AMC, same kind of analysis, currently trading 58.03. I said, hey, this stock is worth only $1.99. You can see the analysis for that stock right by looking at that video here. Zoom, same story here, trading at $392.80, but only worth $23.18. You can watch the analysis here. So that is kind of the theme here in terms of my criticism of the investors investing in these companies, but not the companies themselves. Okay, keep that in mind here. So what's going on here? Well, these companies, the C-suite of these companies are doing something really smart. So they're saying, hey, if you're willing to pay an astronomical price for our shares, we will sell them to you. So that's what AMC did, right? So they raised $230.5 million at an average price of $27.12. So below market value, but way above that $1.99 fair value for the stock. They say, hey, we're gonna acquire some additional leases on theaters. We're going to enhance the theaters that we already have to make the customer experience better. And importantly, we are going to deleverage. So if you go to that video on AMC, one of the big things was they weren't translating their attendance in terms of number of tickets sold and the revenues and translating that into actual cash flows or earnings. But by deleveraging, they will be better able to do that. They've also said, hey, we are willing to sell an additional 11.5 million shares. So keep that in mind. So this is very smart of the management. They're saying, anyway, again, have at it. Have as many of these shares as you want if you're willing to pay a stupidly high price for them. We go to Express, the clothing company. Same thing. They're selling 15 million shares at market prices. They say, look, we're gonna use that money for capital expenditures, deleveraging again, right? So that can help translate revenues to the bottom line, and they're going to do some other investments in terms of helping to make the company more profitable. Again, this is really smart. We also have MicroVision doing the same thing, $140 million worth of stock at market prices. They're going to use this money for working capital and capital expenditures. Again, smart move there. We got GameStop, okay, one of the big meme stocks out there. So they have had a couple of rounds where they've sold shares. They have sold $1.7 billion worth of shares and an average share price of $1.97, worth way higher than it's actually worth. And what they did is they paid down 100% of their long-term debt. Super, super smart. In fact, all these companies really, really, really smart to be doing this. Hey, again, if you want to give me $100 for something that's only worth $5, I will do that all day long. And that's essentially what these companies are doing. And if they take that and they execute it in a smart way by paying down debt and investing properly, these companies will be better off and it will change my price targets for them. Okay. Super, super smart out there. Anyway, happy trading. Hope you enjoyed that. Thank you so much. I'm Brian Kozlowski.